Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Chinese economy, and specifically to talk about the property sector.
China's property sector has been in a deep slump for years, hit by a debt crisis among developers. Cash-strapped private developers like Country Garden have halted construction on a large number of new homes that were pre-sold but now cannot be delivered on time. The buyers of these homes, meanwhile, are continuing to pay off their mortgages. Analysts agree there are tens of millions of uncompleted apartments across China. Policy measures since 2022 have failed to turn around the sector, which represents around a fifth of the country's economy, and the slump remains a major drag on consumer spending and confidence.
Now, if you follow the channel, you'll be fully aware that the property sector makes up around 25% of China's total GDP, and this is a much larger percentage than for most other economies in the world. And the reason that it makes up such a large percentage is because over the last 20 years, developers have been building whole cities in China. They had access to very cheap finance and tons of it. And because they had that debt, they were able to build hundreds of thousands of apartments and pre-sell them to Chinese individuals. But unfortunately, around 3 or 4 years ago, the Chinese authorities decided that they wanted to rein in those developers by introducing a 3 red lines policy, whereby all companies were tested in terms of how much debt they'd taken on, the affordability, and whether or not they could actually pay all of that debt in the future. And unfortunately, the outcome of bringing in that policy was that a lot of the developers actually defaulted on those tests and meant that they could no longer access that cash. And as a result of that, we're now in a state of limbo, whereby these huge property developers can't actually finish all of the apartments that they've started. And people who've signed up to buy those apartments have actually drawn down mortgages, and they're paying the mortgage on something that hasn't even been built yet. And that situation is particular to China. I don't think there's many places in the world where you can actually draw down a mortgage against a property that doesn't exist. So in today's video, I'll have a look at the latest sales data that's come through, which shows that prices are now falling at their fastest rate for over 12 months. Price declines are actually accelerating in China right now. That's leading to a slump in sales, which is obviously causing further problems for the developers. And as a result of all of this, the Chinese authorities have decided that they need to do something about it. They need to put their hands on the rudder and start steering this ship in the right direction. So the Chinese authorities have now introduced a whole host of different stimulus measures. Back in January, they tried to get the developers going again by introducing what they called the whitelist. We'll have a look at how that program has gone over the past few months. And just recently, it's been announced that they are going to reduce the interest rate that is paid on mortgages. They're going to reduce the deposit that people have to put down to buy a property. And they're also going to allow local authorities to buy apartments and then convert them into affordable housing for Chinese nationals. So we'll go through the details on all of that. And then finally today, I'll wrap up with my summary as to what I think these stimulus measures will achieve, whether or not they're likely to get the property sector back on track, and what all of this means for the Chinese economy for 2024. But before we get started today, I'd like to thank today's sponsors, which are you guys. You're sponsoring me in multiple different ways. Firstly, you're sponsoring me by watching the videos, so thank you for doing that. Secondly, everybody that's buying me a coffee or sending me a YouTube super thanks is sponsoring me directly, and I really appreciate that. And then I've got the long-term sponsors, people who've signed up either as Patreons or YouTube members or Buy Me a Coffee members, and you're signing up on a regular basis. That keeps me motivated, really keeps me focused on making as many videos as I can to keep everybody happy. So thank you to all of my sponsors. This chart shows the movement in the price of both newly built housing and second-hand housing in China, dating back to 2011. The black line shows the movement in the price of newly built housing, and the yellow line shows second-hand housing. And the scale on the right-hand side of this chart is a percentage and goes from 10% positive movement at the top to 10% negative movement at the bottom. And what this shows is that prior to the current situation, there have been 2 other periods when house prices started to fall in China. House prices fell at a modest rate in 2012, peaking at 2% for second-hand housing and 1.4% for newly built housing. However, in 2013, there was a strong bounce back in the market and prices increased significantly, hitting a peak of 9.7% for newly built houses and 5.2% for second-hand housing. Prices fell once again during 2015 as a result of a global slowdown at that time. And the peak fall came in April 2015 when newly built property prices fell by 6.6% and second-hand properties by 5.2%. However, once again following this period, there was a strong increase in prices, which hit a peak increase of 10.8% for newly built and 7.9% for second-hand houses by the end of 2016. House price movements remained in positive territory for the next 5 years. However, the rate of price increases started to slow down in May 2019, and there was a continuation of that slowdown all the way through until the start of 2022, when house prices moved into negative territory for both newly built properties and second-hand homes. And the figures for April 2024 show that the fall in house prices is now accelerating. The price of newly built properties is down by 3.5%, which is the largest fall seen since July 2015. And the price of second-hand properties is down by 6.8%, which is actually the biggest fall in China's history. And this fall in the price of second-hand homes is significant because at the end of 2023, for the first time in China's history, second-hand sales overtook newly built sales. This chart shows the total value of property sales in China from 2003 to 2024. And the reason that this is important for the Chinese economy is that it relates directly to the revenue that the property developers are earning and therefore the profitability of those companies and their contribution to GDP. And what this shows is that between 2003 and 2021, there was a remarkable and rapid increase in the total value of property sales in China. The property market was opened up to Chinese nationals at the end of the 1990s. They were able to buy property for the first time ever, and this became a feeding frenzy. People were desperate to buy property. In 2003, total value of the market was around 1 trillion yuan, which equated to around $150 billion. However, by 2021, that market size had increased to 18 trillion yuan, which equates to around $2.6 trillion. So this is why the property sector became such an important part of China's GDP. However, if you look at what's happened over the last 3 years, there has been a dramatic reduction. In 2022, the total volume of sales fell to 13 trillion yuan, which was the lowest level seen since 2016. In 2023, it fell to 12 trillion yuan, and in 2024, it's down to 11 trillion yuan, which is the lowest level that's been seen since 2015. And if you take a step back and look at the shape of this chart, it really explains why the Chinese economy is struggling right now. Because in the period between 2003 and 2021, property was contributing 25% of total GDP, and it was growing year on year. So this was fantastic from the Chinese authorities' point of view. However, compared with 2021, the last 3 years have seen a shortfall of 5 trillion, 6 trillion, and 7 trillion yuan as a result of the drop-off in property sales. And when you consider that China is aiming for 5% year-on-year growth, the net impact of those falls is even worse. And what this means is that in order to hit its 5% growth target, the Chinese economy needs to find that gap from somewhere else in its economy. And because there's been a slowdown in the global economy over the last 12 months or so, that means that countries are no longer buying as much from China as they were. And this is one of the reasons why China is struggling to hit its 5% target, because it doesn't have an obvious replacement to come in and fill the gap that's been left by the property market. And to highlight that point, this chart shows the monthly sales of the top 100 property developers in China, compared with their sales from the previous year. And the scale on the right-hand side of this chart goes from plus 40% at the top to minus 60% at the bottom. And what you can see here is that in 24 of the 27 months between January 22 and March 24. Monthly revenue earned by these developers was in negative territory, and it was in seriously negative territory. In some of these months, it was actually down by 60%. And if you look at the average, it's around 40%. And that is a huge amount for any company to lose in sales in one particular month. But when you add the cumulative impact of all of this, it is absolutely enormous, because the figures in 2023 are being compared against the figures for 2022. And as you can see, the figures for 2022 were down by between 60 and 30%. So when you add the cumulative impact of year-on-year falls, it becomes a really big figure. And that's one of the reasons why the Chinese economy is struggling right now, because the powerhouse of its economy over the previous 20 years, these property developers that could do no wrong, that were building huge cities all over China and selling them before they'd even built anything, they went into decline, and that's led to a huge black hole in the Chinese economy. And in terms of looking at the outlook, this chart shows the level of property investment in China over the last 12 months. And the scale on the right-hand side of this chart is a percentage, which starts at 0 at the top and goes down to minus 10% at the bottom. And what this shows is that in every single one of the last 12 months, the amount of money being invested into the property sector has fallen. So there is now a declining amount of capital going into the sector, which obviously means that it's going to be very difficult to turn things around. If you start investing less and less into a particular area, then it's likely to continue shrinking. It becomes less attractive, and therefore it attracts less investment. And this becomes a vicious circle, and that's the point that we've got to for the Chinese property market. So clearly things are not going well in the property market in China. And in order to try to recover the situation, the Chinese authorities have introduced a variety of different initiatives. And the first of these was in January 2024, when they published what they called a whitelist of property developers and property developments that they wanted banks to lend money to try to get some of the unfinished apartments completed. And this was really designed to rebuild the confidence that had been lost by Chinese consumers in the market, to try to get people buying again, to get the developers back on their feet. And it's now been revealed that this policy is not working. It hasn't delivered the results that the Chinese authorities wanted. And the main reasons for this are that the banks involved are state-owned, so they do have a direct link to the government. However, they have to operate independently. They have to show that all of their loans are being made on a commercial basis, and they need to be repaid from the sale of those properties. So this isn't a special situation where the government was giving the money to the banks for free, and if they lost it, it didn't matter. They still have to report a profit, and so the loans have to be looked at on a commercial basis. And one of the problems is that there are no buyers. People don't want to buy the newly built properties. So you can give the money to the developer, and that developer can use it to complete all those unfinished apartments. But if nobody then turns up to actually buy them, then you're in a world of pain. And obviously there is a huge number of apartments that have been pre-sold. But the problem with those apartments is that the developers have already had the money, and that money is gone. So they can't repay the bank with the money that they've spent on something else. They need to generate new capital. And because of that reason, the banks haven't been signing off on the deals. And it's also been reported that in situations where the bank has actually offered the developer a loan, the developers are reluctant to draw down on them because the terms and conditions have been put together on a commercial basis. So the bank is actually charging a high rate of interest, and the developer can't get the deal to work because house prices are falling, as we've just seen. So the end product is likely to be worth less than it was when they first started those projects months and potentially years ago. And so the economics simply don't work. And what the developers don't want to do is get themselves further into difficulty by taking on new debt, completing the apartments, being unable to sell them, and then being hit with problems from that additional debt. Two of the major problems with the Chinese property market at the moment are that Chinese consumers have lost confidence. They no longer want to buy property. It isn't the holy grail that it was 5 or 10 years ago. And the property developers have millions, potentially tens of millions of unfinished apartments that they don't have the capital to complete. So in order to try to solve these problems, the Chinese authorities have brought in some new policy measures to try to get the market going again. Now, the first of these is that they've removed what was previously a floor in terms of interest rates. There was a minimum amount that banks had to charge when they're providing mortgages to Chinese individuals, and that has now been scrapped. So basically, the government is saying to the banks, you can offer mortgages as low as you like to try to get the market going. And the second thing they've done alongside that is reduce the minimum deposit that's required for buyers when they're making a purchase. So previously, there was a minimum deposit of 20% for first-time buyers and 30% for people who already own a property. That's now been dropped to 15 and 20% respectively. So these measures are really designed to make it easier for people to buy property. But does it solve the problem of confidence? Would you buy a property if somebody offered you a mortgage that's cheaper than the current rates and said that you didn't have to put down as much of a deposit if prices are falling month on month at a record rate? I'm not sure that I would. If I'm watching a market going into decline, potentially nosediving as the Chinese market is right now, it doesn't really matter what terms you offer me as a mortgage. I don't want to buy. I'm sitting back and waiting for the market to bottom out. Why would somebody dive in and start buying property in a falling market? It doesn't really make sense. The other initiative that's been announced by the Chinese authorities is that local authorities are now approved to step into the property market and buy unsold apartments. So this is basically a way of clearing all of those unsold apartments and increasing demand. If consumers in China don't want to buy those properties, then effectively the state, through the local authorities, will start buying them directly. And this is a very unusual situation. You don't see this in many countries in the world. If you're a private developer and you've built apartments that nobody wants to buy, then you're on your own. If the market dies, then you're likely to go with it. However, in China, rather than letting that happen, what they're now doing is nationalizing these apartments. The local authorities are stepping in and buying these apartments. Presumably, they will do deals on a block-by-block basis. So we're talking thousands of apartments at a time that will be purchased here. And the benefits of doing that are multiple. Firstly, the property developers will be paid for those apartments, so they'll get some cash flow in, which they can then use to start other developments or to complete other developments. Secondly, there'll be people employed because the developers will then start hiring back more people because they'll need them to start completing all of those other apartments. Thirdly, it means that the local authorities will have this housing stock, so they will then be able to offer affordable housing to Chinese nationals, which helps the cash flow of those people involved. And then lastly, it may start to build confidence in the sector again, because the official statistics that we've just been through earlier in this video will start to show that home sales are rising. I don't know what's going to happen with regards to the official prices, but it may be that they can show that prices have stabilized as well. And all of that will mean that people may start to get confidence back in the property sector. The other potential benefit here is that the local authorities can also buy second-hand homes. So they can buy homes from Chinese nationals who want to sell their existing property and then maybe buy a newly built property from the developers. And that would obviously help the property developers further because it creates additional demand. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening right now in the Chinese property market is fascinating. We've been following this story for the last few years, so we know a lot of the details. And the main problem initially was that the property developers ran out of cash. So they weren't able to complete those builds, and therefore they couldn't deliver on all of the apartments that they'd pre-sold to Chinese nationals. And that became a major issue, and we saw prices starting to plummet. And the Chinese authorities have tried to fix that problem over the last 12 months or so. They've stepped in and allowed some of those developers to actually be acquired by the state-run developers. So they provided some finance through those businesses. They also provided more debt finance in the form of this whitelist arrangement, whereby developers could actually access debt to finish those builds. But the problem with both of those situations was that it didn't address the fundamental issue of a lack of demand. Because of what's happened in the property sector over the last few years, Prices have come down, and a lot of people are paying mortgages on apartments that haven't even been built. That is absolutely incredible, and I would say quite scandalous that if you were sitting as one of those people, if you'd pulled down a mortgage of $100,000, your apartment wasn't built, and you're paying that mortgage every single month, as well as having to pay for whatever you're living right now. That is an absolute nightmare. So that was why the demand fell over the last few years, and the Chinese authorities have now woken up and realised that in order to get the property market back up and running, they need to stimulate demand. It's one thing allowing the developers to finish all of the apartments, but if nobody wants to buy them, that doesn't fix the market. So what they've now announced are initiatives to try to get that demand back up and running. And as we discussed, the first thing that they announced was that there will be lower mortgage rates and lower deposits. But as I said earlier in the video, that wouldn't encourage me to step into a market that's falling month on month, because I'm still going to lose money. Even if you offer me a loan at 0%, if I don't have to pay any interest on it, if the value of my property is falling by 3 or 4 or 5%, then I'm losing 3 or 4 or 5%. So I don't want to take that risk. Why would I do that? Now, obviously, from a Chinese consumer's point of view, there is an element of needing somewhere to live. So if you were desperate, if you needed somewhere to live, then maybe you take on a mortgage and buy a property. But that isn't the problem with the market right now. There isn't a shortfall in terms of supply and excess demand. What we've got is the opposite situation. We've got a lot of supply and a lot of people who simply don't want to buy property right now, because many Chinese nationals have had their fingers burned over the last few years. So I don't think the first stimulus that China have introduced is going to fix the problem in the short term. Now, in terms of the second idea, whereby the local authorities now step in and buy large chunks of property from the developers, that does have some merits because it clears all of that excess supply. It also solves the problem for the developers in terms of who's actually going to buy those apartments, even if you take on the debt and build them. If you can't sell them, obviously that puts you in a worse situation because you've then got even more debt and no revenue. So it does give those developers a guaranteed out. But the big question is, what's the valuation of those properties? Will the local authorities need a deep discount in order to encourage them to make that purchase? And I've been working on a video recently talking about the $9 trillion of debt that's been built up at local authority level. These local authorities are bankrupt themselves. They simply don't have enough revenue coming in because the only way that they can repay all of that debt is by selling land to developers. And obviously that market has completely dried up. So I think what we're seeing here is potentially the local authorities could unlock some future land sales if they give large chunks of cash to these developers. Those developers may give it back to the local authority buying more land. So it could be a beneficial arrangement for both sides. But the key question is, what's the price of those apartments? It needs to be at least at break-even level for all of those developers. Otherwise, they're going to be banking even bigger losses than we looked at earlier in today's video. So the overall summary of today's video is that the property market in China is still in dire straits. It's on its knees. Prices in April have fallen at their fastest rate for a very long time. The market is continuing to nosedive. The volume of sales is also going down, and that means that developers are banking losses month on month, and this is seriously bad news for the Chinese economy because property makes up around 25% of GDP. Well, it used to. I'm not sure it's going to make up 25% in 2024 because the amount of revenue coming from property is contracting. So I don't think it will be 25% this year. But the problem that China has is that that's left a huge black hole in its economy for 2024. Now, the government is trying to stimulate the market. It's trying to do things to get things back up and running. But I don't think the latest round of measures is going to fix it in the short term. So 2024 is likely to be a bad year for property in China. That means that it's going to be a bad year in terms of GDP for China. And the 5% growth target that China has for 2024 looks highly challenging. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.